All right, deep divers, buckle up. We're jumping headfirst into institutional money in crypto today. And the big story. It's all about Ethereum and a massive move by BlackRock. So today, we're really going to unpack the source material we have. We've got an article from CoinWorld pulling data from places like LookOnChain, SoSoValue, and some analysis from Fractal. Our mission basically is to get into the details, figure out the context, the why now, and, the potential impact of this huge BlackRock Ethereum play, all based just on what these sources are telling us. And huge is, well, it's kind of an understatement. We're talking over $500 million
Right.
in a week. Plus, the article points out this really interesting, kind of surprising contrast with BlackRock's Bitcoin fund flows. Adds another layer.
Yeah, it's a fascinating snapshot, really. Shows how these big financial players are navigating the digital asset space. These sources give us a pretty specific look at this Ethereum move, offering a glimpse into their current strategy.
Okay, let's dive in. The main event the article zeroes in on, BlackRock's massive ETH purchase. The core fact from the sources, specifically look-on-chain data cited by CoinWorld, BlackRock scooped up over 214,000 ETH,
Hmm.
and the value they put on that, roughly $560 million.
Yeah, a significant chunk of change.
And what's really wild, according to the source, is the time frame. This all happened in just 1 week. That's
Yeah.
building a position fast.
Right. And the article makes a point about the timing. This wasn't like during some crazy price run-up. It happened when ETH was actually in a period of consolidation. Think of it like the market was just kind of catching its breath. The price was moving sideways, mostly between, say, $2,500 and $2,700 for a few weeks. The source suggests buying during this market calm might have been, deliberate, maybe trying to get in before things potentially take off.
Okay, so $500 million acquired while the market's quiet. How'd they actually do it? And why does the article suggest this was the moment?
Well, the how is pretty clear from the source. It was done through their specific fund, the iShares Ethereum Trust. You'll probably see it called ETHA. And the why now ties straight back to what the article highlights as a major catalyst. U.S. regulators giving the green light to Ethereum Spot ETFs earlier this year. That approval was key. It basically provided a regulated, straightforward way for big players like BlackRock to get direct exposure to ETH.
Right, okay, so the regulatory path was cleared. That makes sense. And the source material, it really hammers home that this isn't just a one-time buy. It's part of a pattern, right? Sustained interest shown by ETF inflows. The SoSoValue data in the article is pretty striking. Total net daily inflows for all ETH ETFs hit about $109 million. But listen to this plus. BlackRock's fund ETHA was responsible for $77 million of that single-day total.
Exactly. It's a huge slice of the pie. And that momentum, it wasn't just one day. The source data showed this was the 12th day in a row of positive inflows into ETH-based funds overall. That kind of streak, 12 consecutive days, signals it's more than just a blip. It points towards, well, institutions consistently putting money in over time, based on the articles read.
Okay, but here's that twist the article brings up. It contrasts this strong ETH inflow with what was happening with BlackRock's Bitcoin ETF around the same time.
Mm-hmm. That's an interesting part of the story presented.
Yeah, the piece talks about significant outflows from their Bitcoin fund, totaling $561 million just on May 30th and June 2nd alone. Big numbers going out. And while the source mentions Bitcoin inflows did briefly return like $58 million one day, it emphasizes that this was, and I'm quoting here, overshadowed by the momentum in Ethereum's ETF.
It is fascinating, isn't it? Seeing that stark difference from the same institution based on the source's reporting for that period. Now, you can't definitively say it's a direct swap like they sold BTC to buy ETH, but seeing strong ETH accumulation alongside significant BTC outflows, well, the article suggests you could interpret that as maybe a tactical shift, or perhaps a reevaluation of where they see the immediate opportunity between the top two crypto assets, at least at that moment. Raises questions, for sure.
Definitely. Okay, let's pivot slightly to the market signals the article digs into. It uses this global in-out-of-the-money indicator, the GIOM.
Right. The GAM basically looks at the prices where existing holders bought their ETH, helps identify potential support or resistance levels. So the source uses this to pinpoint Ethereum's next big resistance zone, where selling might pick up between roughly $2,726 and $2,856. And it gets specific. About 4.13 million ETH, held by 2.7 million different addresses, were bought in that exact range. But then there's the out-of-the-money side. These are tokens bought higher than the current price. The article notes over 12 million ETH fall into this category, with an average buy-in price, the cost basis, around $2,613, which is, slightly above that $2,500 $2,700 consolidation range we mentioned earlier.
Okay, hang on. So a smaller amount bought near potential resistance, but a much larger amount, over 12 million ETH, bought a bit higher at $2,613. How does the article get from that to suggesting less near-term selling pressure? That seems a bit counterintuitive at first glance.
Well, the logic presented in the source boils down to investor psychology, kinda. If you bought your ETH at $2,613 and the price is, say, $2,600 or lower, you're currently holding at a loss. You're underwater. The thinking is you're probably less likely to sell right now and lock in that loss. Compare that to the group who bought closer to $2,700, who might be tempted to sell near that $2,700, $2,800 resistance to get out even or take a tiny profit. The sheer volume of ETH held by those underwater 12 million versus the 4.13 million near potential profit taking suggests, according to this analysis, that fewer people might be rushing to sell at these lower levels. They might wait. So that imbalance could reduce the immediate sell-side pressure. That's the interpretation from the source.
Okay, I see the argument now. More potential holders than immediate sellers in that critical range. The article also brings in an analyst view, right? Joao Wedson from Fractal.
Yeah, Joao Wedson, CEO of Fractal. His observation, as quoted, focuses on market makers. He's reportedly seeing significant activity from these large players, the market makers, down at lower price levels. And he interprets that activity, according to the source, as a signal that a breakout might be setting up, like the price could be ready to move decisively out of that consolidation zone. And he gives actual numbers, too. He sees a short-term target of $2,830 if ETH can push above $2,660. He also flags $2,556 as a key level to watch, maybe a stop-loss area based on liquidation data, where leveraged positions might get wiped out, which can fuel bigger moves.
And the article layers on some technical indicators, too, from the daily chart, things supporting that bullish idea.
Exactly. It mentions things like a bullish crossover of moving averages, the 50-day and 100-day EMAs specifically. That's often seen as a positive momentum signal. And also the RSI, the Relative Strength Index, apparently showing renewed buyer interest. So yeah, the technicals mentioned seem to align with the analyst's view of potential upward movement, framing a consistent picture within the source.
Okay, so putting it all together.
Right, the article sort of synthesizes all these threads into its final take. And the main conclusion presented is pretty clear. BlackRock's huge $560 million buy done through their regulated Ether trust. It's not being framed as just a quick speculative flip. The source interprets it as reflecting a strategic, long-term commitment to Ethereum.
And why does that distinction matter so much, according to the article? How does it show, in their words, growing confidence and position ETH as a key player?
Well, the argument laid out is that when an institution like BlackRock, a real giant in traditional finance, makes such a large buy through a regulated channel during a period of relative price quiet, and it aligns with trends like steady ETF inflows and positive analyst signals, it sends a powerful message. It suggests they're not just playing market timing. It implies a deeper belief in Ethereum's fundamental value, its technology, its potential future role. That kind of validation from a major player, the article concludes, really boosts Ethereum's legitimacy and solidifies its importance in the whole digital asset landscape.
Wow. Okay, so quick recap. We covered BlackRock's massive ETH buy, over $500 million during that market lull. We looked at the ETF context, the U.S. approval opening doors, those consistent inflows, especially into BlackRock's fund. We noted that interesting contrast with the Bitcoin fund outflows mentioned. And we explored the market analysis from the source of the GM data suggesting maybe less sell pressure, plus the analysts seeing breakout signals. So thinking about this for you, our listener, what's the takeaway here? How does seeing these big, seemingly strategic moves by institutions like BlackRock using these new regulated products for Ethereum maybe change how you interpret market signals or filter information?
Yeah, it leads to a pretty interesting thought, doesn't it? If we connect the dots presented in the source, you have major institutions accumulating ETH while the price is relatively calm. You have analysts interpreting data as potentially bullish, signaling a breakout. So the provocative question maybe is, what if this isn't just an isolated event? What if this signals a broader, more sustained shift in how serious institutional capital views and allocates to assets like Ethereum going forward? That's definitely something to keep in mind, I think, as you process all the information flying around in this space.
Absolutely. Food for thought. Well, thanks everyone for joining us on this deep dive.